Welcome back everyone to the course Goods and Services Tax. I hope you have gone through the basic introductory video on Goods and Services Tax and has got an idea about what GST is. So today we will be discussing on a concept known as tax cascading. Don't get worried, it is a simple concept which will be explained with a simple example in the slides to follow. So do you know what is the concept of tax cascading? Have you heard it anywhere? Tax cascading means tax on tax. That is, tax is charged on the tax. So let's see what it is. So before GST, we had already discussed there were value added tax. There were so many other indirect taxes which were subsumed to goods and services tax. So before GST, the multi-stage levy of tax happened as follows. So let's take an example of a manufacturer. A manufacturer purchases raw materials from a shop, and when he purchases raw materials, he pays a payment, the purchase price, and that purchase price involves the price of the product which is included by value added tax. So it means that the price of the product includes the cost of the product plus value added tax. So after the manufacturing of the product, when the manufacturer sells the product to the wholesaler, it is clearly depicted in the flow chart. When the manufacturer sells the product to the wholesaler, he needs to pay an excise duty when the product is out for delivery. So already he has paid a value added tax in the beginning when he purchased raw materials, and now when he sells it to the wholesaler, he again pays an excise duty. So the wholesaler purchases the product from the manufacturer, and when the wholesaler sells it to the retailer, what happens? He adds the amount of VAT that is paid by him to the manufacturer when he purchased the product from the manufacturer. So the price of the product gets added by the amount of tax or by the amount of indirect tax paid by the wholesaler to the manufacturer. So he sells the product to the retailer, and then when retailer purchases the product, he is in a situation to pay the amount of VAT to the wholesaler. And when the retailer sells the product to the final consumer, he includes that amount of VAT also. So the purchase price of the product may include the amount of indirect tax or VAT that is paid by him to the wholesaler. And finally, the product reaches the final consumer for consumption. So I think you can imagine the price of a product when it reaches in the hands of the final consumer. So this concept is known as tax cascading. That means tax is charged upon tax. So it is clearly identified from the example that the cost of the product was a small amount, and it when reaches the hands of the final consumer, the price of the product shoots up. Okay, so let's see this concept before GST regime with the help of a numerical example. So what is tax cascading or cascading effect? So in our example, we have a manufacturer. He is planning to produce a toy. So the steps that are incurred are given in the examples, and we assume that the tax rate is constant, that is at 10%. Okay, so here When the manufacturer buys the raw material for production, the actual cost of the raw material is rupees 100 and 10% tax, that is 100 rupees. So the amount of tax is added to the cost of the product and totally it comes to 1100. So the manufacturer incurs an expense of 1100 rupees to buy raw materials. So when the manufacturer goes to the second stage, so second stage is manufacturer incurred a cost of 400 rupees. Or in other words, we can say there is a value addition of 400 rupees. So he adds the cost of the product and the value addition, and now the cost of the product becomes rupees 1500. So 10% tax upon that, it will come to rupees 150. So here please note that already he has paid 100 rupees as tax on the cost of the product, and he again pays a tax of rupees 150 on the product. So here he does not pay tax on the value addition. He paid tax on the total cost of the product, in which the tax he paid already is included. So that is why it is known as tax cascading effect. Tax is again charged on a tax amount. Okay, so the total cost of the product comes to 1650 rupees. Then he sells the product to the wholesaler at 1650 rupees. The product reaches the hands of the wholesaler, and there it occurs a value addition of 300 rupees. So he adds rupees 300 to the cost of the product, that is the value addition, and he charges 10% tax on this amount, that is 1950 rupees, which includes the value addition and the cost of the product. So that so the tax amount comes to rupees 195.